Mercedes-Benz just shocked the entire auto industry, and this could mean huge savings for you. Luxury car prices are plummeting, and if you've ever dreamed of owning a Mercedes, now might be the perfect time. But here's the real question. Is this a massive discount or a hidden trap? Stick around, because what's happening right now could change the car market forever. If you've been waiting for the right moment to buy a luxury car, this might be it. Mercedes-Benz just made a major move that's sending shockwaves through the auto industry. Dealers are slashing prices, inventory is stacking up, and buyers are scoring insane deals. But why is this happening? And what does it mean for you? Let's break it all down. So here's the deal. Mercedes recently announced a huge shift in their sales strategy. Instead of focusing solely on ultra-exclusive, high-profit models, they're pushing to move more vehicles at lower margins. Translation: prices are dropping fast. Some dealerships are offering discounts of 10%, 15%, even 20% on select models. We're talking about cars that were once $80,000, now going for $65,000 or less. Mercedes-Benz just dropped a pricing bombshell, slashing prices across several models, and the auto industry is buzzing. But behind the shocking markdowns lies a perfect storm of economic pressure, market dynamics, and changing consumer behavior. This isn't just a seasonal sale. It's a strategic shakeup to stay afloat in an increasingly cutthroat luxury market. With profits tightening and inventory swelling, Mercedes is being forced to pivot hard to protect its brand relevance and bottom line. This move reflects a broader shift across the industry as legacy automakers grapple with electric disruption, new global competitors, and a fundamental evolution in what buyers want and are willing to pay for. Electric vehicle pressure. Tesla's grip on the electric vehicle market has never been stronger, and now Chinese EV makers like BYD and NIO are coming in fast, offering stylish, tech-packed models at shockingly affordable prices. Mercedes, long known for high-end combustion engines and a best-or-nothing philosophy, is being squeezed from all sides. Luxury buyers who once wouldn't blink at $90,000 sedan are now cross-shopping Teslas and Chinese EVs that offer comparable performance with cutting-edge features for tens of thousands less. To compete, Mercedes can't just rest on heritage anymore. Slashing prices is their way of shouting, "We're still in the game." It's a bold pivot aimed at making their electric and hybrid models more appealing to a market that's rapidly shifting away from gas and toward greener, tech-driven alternatives. Overstocked inventory. Walk into a Mercedes dealership right now, and chances are you'll see a lot full of unsold vehicles. From gas-powered SUVs to newer EV models, the 2024 lineup is stacking up, and that's a big problem. Dealers are under pressure to make room for the incoming 2025 models, especially as Mercedes prepares to unveil its next-generation EVs and updated interiors. Overstock equals overhead, and cars sitting still mean cash flow freezes. So, dealers are slashing prices aggressively, sometimes under invoice, just to move metal. Mercedes HQ is backing them up with factory incentives and markdowns, because clearing inventory isn't just smart, it's essential to survive the increasingly rapid model turnover cycles in today's market. Changing buyer habits. Once upon a time, luxury buyers were eager to flash their cash on high-end rides with leather seats and roaring engines. But that era is cooling off fast. Younger buyers are more cautious with big purchases, and many are prioritizing tech, sustainability, and value over brand prestige. The aspirational appeal of luxury isn't gone, but it's definitely evolving. Today's buyer wants more for less, and they're not as loyal to legacy names. Combine that with rising interest rates, economic uncertainty, and a growing disinterest in car ownership in general, and Mercedes is facing a demand curve unlike anything it's dealt with before. These price cuts aren't just reactive. They're an acknowledgement that to stay relevant, Mercedes has to evolve with the times, shedding some of the old-world pricing elitism in favor of a more pragmatic, value-driven strategy. What this means for buyers. For anyone who's been eyeing a Mercedes but held off because of the price tag, this is your moment. The recent price plunge isn't just a headline. It's translating into real, tangible savings for buyers across the board. Whether you're looking to buy outright, finance, or lease, Mercedes dealerships are rolling out some of the most buyer-friendly deals we've seen in years. It's rare to see a luxury brand of this caliber essentially roll out the red carpet for everyday shoppers, but that's exactly what's happening. With an oversupply of vehicles and fierce competition breathing down their neck, Mercedes is going all in to get people into showrooms, and buyers now have unprecedented leverage. Record low financing rates. While the broader auto market continues to feel the crunch of rising interest rates, Mercedes is bucking the trend with aggressive financing incentives. Some models are being offered with APRs as low as 0.9% or even 0% for qualified buyers, an unheard of move in today's economic climate. These rates, often backed by the manufacturer itself, mean buyers can stretch their budgets further and potentially upgrade to higher trims or added features without the usual financial sting. For anyone financing a luxury car, even a few percentage points off the interest rate can mean thousands saved over the life of the loan, making this a rare window of opportunity. Lease deals with lower monthly payments. Leasing a Mercedes just got a lot more attractive. Dealers are slashing lease payments to entice drivers who want luxury without the long-term commitment. Monthly payments on popular models like the C-Class, GLC, and even some electric EQ models have dropped significantly, in some cases dipping below what you'd pay for a well-equipped mainstream vehicle. Lower down payments, shorter lease terms, and generous mileage allowances are all part of the new leasing landscape. For buyers who value flexibility, this could be the perfect time to step into a Benz without locking yourself into a heavy financial burden. Even cash incentives on top of discounts. As if the price drops and financing perks weren't enough, Mercedes is piling on cold hard cash to sweeten the deal. Many dealerships are now offering thousands in bonus cash, loyalty incentives, or conquest offers just for trading in a competitor's brand. These cashback deals can be stacked on top of already discounted MSRPs, making some high-end models more affordable than ever. It's a sign of how serious Mercedes is about clearing inventory and how much power buyers now hold. With the right timing and a little negotiation, you could walk away with a 5-figure discount on a brand new luxury vehicle. Which models are the best deals? Now that Mercedes has dropped the hammer on pricing, the big question is, which model should you be looking at? While discounts are popping up across the entire lineup, a few standout deals are turning heads for just how much value they now offer. Whether you're stepping into the luxury game for the first time or upgrading to something roomier and more refined, there's a Mercedes out there with your name on it, and at a price that would have been unthinkable just months ago. Let's break down 3 of the best buys in the current Mercedes fire sale. The Mercedes C-Class, perfect entry-level luxury. If you've always dreamed of owning a Benz, but figured it was out of reach, the C-Class is now the gateway drug to German luxury. Sleek, sporty, and packed with tech, the C-Class blends performance and elegance in a way that's hard to beat, and with current discounts, it's priced closer to a top-trim Honda Accord than a traditional luxury car. Some deals are cutting $5,000 to $8,000 off MSRP, with optional cashback offers and finance specials that bring this stylish sedan well within range for first-time luxury buyers. It's the perfect blend of prestige and practicality, and now it's actually affordable. The E-Class, premium comfort at a steal. The E-Class has always been the sweet spot in the Mercedes lineup. A step up in size, comfort, and refinement without tipping into full-on chauffeur mode. And now, thanks to heavy discounts and lease incentives, you can snag one at a price that rivals some non-luxury brands' mid-range SUVs. We're seeing dealers knock off $10,000 or more on certain trims, and that's before even factoring in lease deals that dip under $700 per month for well-equipped models. If you want that high-end feel, the buttery smooth ride, plush cabin, and prestige factor, the E-Class is the move right now. Even the GLE SUV, if you need space and style. Family hauler? Road trip beast? Everyday status symbol? The GLE checks every box, and it's now seeing some of the most aggressive price drops in the Mercedes SUV family. Known for its spacious interior, cutting-edge tech, and bold design, the GLE is an SUV that doesn't just turn heads, it owns the road. And now, with discounts ranging from $7,500 to over $12,000 depending on trim and region, it's more accessible than ever. Leasing options have also dipped into surprisingly reasonable territory, making it a top pick for families or professionals who want it all: space, power, and unmistakable style. Dealers in panic mode. Liquidation has begun. This isn't a drill. Mercedes dealerships across the country are in full-blown panic mode. Inventory is piling up. 2025 models are weeks away, and they're running out of room fast. The result? Massive liquidation. We're talking fire sale prices on brand new luxury vehicles. Dealers are slashing MSRPs by $10,000, $000, $15,000, $000, even $20,000 just to move metal and make space. Sales managers are not playing hardball. They're handing out deals like candy because they have to. If you've ever wanted a Mercedes, this is your shot. Walk into a showroom today and you'll find desperate offers, stacked incentives, zero-interest financing, and cash-on-the-hood deals that look like typos. The pressure is real, the margins are gone, and the race to clear inventory has officially begun. Hesitate, and you'll miss it. The domino effect. How this crashes the whole luxury market. Mercedes didn't just drop prices. They dropped a grenade into the luxury auto world. This isn't just about one brand adjusting course. This is the start of a domino effect that could send shockwaves through the entire luxury segment. When a powerhouse like Mercedes cuts prices this deep, competitors have no choice but to follow. BMW, Audi, Lexus, even Porsche, they're all watching nervously as customers start asking, "Why should I pay more?" Dealers across the board are bracing for the fallout, slashing prices, juicing lease offers, and scrambling to protect market share before they lose loyal buyers to Benz's aggressive new strategy. This kind of move forces a reset in consumer expectations. Buyers will no longer tolerate inflated MSRPs and weak incentives. Not when a fully loaded E-Class is suddenly thousands cheaper than its rivals. The luxury car bubble is bursting, and legacy pricing models are under attack. What we're witnessing isn't a seasonal sale. It's a market correction, a luxury-level crash in motion. And once the floodgates open, there's no going back. Get ready. This changes everything. The shady truth behind the discounts. Think these massive Mercedes discounts are just a generous gift to buyers? Think again. Behind the flashy markdowns and limited-time offers lies a much grittier reality. Mercedes is in trouble, and they don't want you to see it. These price cuts aren't just about staying competitive. They're about covering up mistakes. Overproduction, misjudged demand, overpriced EVs that didn't sell. And now, they're trying to offload the excess without tanking the brand's image. But here's the catch. While it looks like you're getting a deal, some of these discounts are being pulled from inflated sticker prices that were never realistic to begin with. Add-on packages, dealer markups, and quietly cut standard features mean you're not always getting the full story. Plus, some dealers are tacking on hidden fees and burying costs in financing terms that look sweet on the surface, but bite hard in the long run. This liquidation frenzy isn't just about generosity. It's damage control disguised as opportunity. So yes, the deals are real. But don't be fooled. They're not doing this for you. They're doing it to save themselves. Dig deep, read the fine print, and negotiate like your wallet depends on it. Because right now, you're not just shopping. You're playing a high-stakes game of smoke and mirrors. Expert prediction. Will prices bounce back or crash harder? Industry insiders are sounding the alarm. This may just be the beginning. While some buyers are rushing in, hoping to catch the bottom of the market, seasoned analysts warn that the real drop might still be coming. The luxury auto market is facing a tectonic shift, one that's unlikely to reverse anytime soon. With overstocked lots, rising competition from electro-disruptors, and consumer confidence on shaky ground, many experts say the luxury price bubble is primed to crack wide open. Sure, Mercedes is leading the markdown charge now, but BMW, Audi, and Lexus aren't far behind. As they're forced to follow suit, prices across the board could plunge even lower, turning today's unbelievable deal into tomorrow's regretful overpay. On top of that, the surge of discounted leases and low APR financing is temporarily propping up demand. But once those incentives expire, expect another wave of price slashes just to keep showroom doors open. Bottom line, don't count on a bounce back. Not yet. This isn't a flash sale. It's a market correction in real time. If inventory levels stay high and EV adoption continues to reshape buyer preferences, experts say we could be looking at a long, painful slide rather than a sharp rebound. So if you're buying, be smart. If you're waiting, stay sharp. The floor may not be in yet. The aftermath. What happens to current owners? While new buyers are celebrating deep discounts, current Mercedes owners are facing a harsh reality. Their car's value may have just fallen off a cliff. Overnight, resale values are taking a hit, trade-in offers are dropping, and depreciation curves are steepening like never before. Owners who paid full sticker just months ago are now watching similar models roll off the lot for $10,000 to $20,000 less. The result? Instant negative equity. For those with leases, this means their residual values may no longer reflect market reality, leaving little to no equity at lease end. For recent buyers who financed, trading in, or refinancing just got way more difficult. And for longtime brand loyalists, confidence is being shaken. Why invest in a premium brand if it can't hold its value? This discount spree could leave a lasting scar on Mercedes's resale reputation. The luxury image, built on exclusivity and slow depreciation, is suddenly vulnerable. Owners are now stuck asking, did I just overpay for a badge? And worse, will it happen again? It's a tough pill to swallow, and for many, this buyer's market feels like a betrayal. The bottom line? When luxury prices crash, someone pays the price, and this time, it might be the loyal customers. Dealers revolt. We can't survive these margins. The tension in Mercedes dealerships is palpable, with a growing revolt brewing among franchise owners who are facing the brunt of the company's aggressive price slashes. Many are outright furious, with multiple dealers now claiming they cannot survive under these razor-thin margins. For years, luxury car dealerships have operated on high profit margins, charging premium prices on both vehicles and add-ons. But with the sharp markdowns imposed on popular models, these same dealers are now seeing their profitability erode to the point of collapse. In some cases, the money they make on each sale isn't even enough to cover the operational costs of running a dealership, let alone sustain their workforce or pay for the endless inventory sitting unsold. The reality is harsh. Dealers are being forced to sell cars at or below invoice, which means they're losing money on every single transaction. It's a nightmare scenario, and many dealers fear that if this continues, they'll be out of business entirely. What was once a lucrative partnership with a prestige brand is now becoming an unsustainable burden. As these franchise owners band together to voice their concerns, the outcry is intensifying. Several are now demanding that Mercedes take immediate action to reverse the pricing strategy before it's too late. These dealers aren't just angry, they're desperate. For them, this isn't just about bad business decisions, it's about survival. They are now faced with a dilemma. Either follow the corporate mandate and risk financial ruin, or push back and risk damaging their long-term relationship with one of the world's most iconic luxury brands. Some have even warned that if Mercedes doesn't adjust their pricing strategy soon, they'll be forced to reconsider their partnership with the brand altogether. This revolt is more than just a revolt against poor pricing. It's a revolt against a corporate strategy that is threatening to upend the very foundation of their livelihoods. The stakes couldn't be higher, and the future of Mercedes dealerships, especially those with smaller profit margins, is now hanging by a thread. Mercedes' endgame. Is this a genius move or corporate suicide? What Mercedes is doing right now could either be hailed as a masterstroke of modern automotive strategy or a reckless gamble that sends the brand spiraling into irrelevance. By slashing prices across their entire lineup, the luxury giant is betting big that the shift to volume over margin will secure long-term survival in a fiercely competitive market. On the surface, this looks like an act of desperation, a knee-jerk reaction to the meteoric rise of Tesla and the rapidly growing wave of Chinese EV manufacturers. But if you dig deeper, it's possible Mercedes is executing a calculated play to rebrand themselves as a more accessible luxury option while capturing market share from the mass adoption of electric vehicles. This move could open the door to a completely new customer base, driving sales volume in ways that traditional luxury pricing models couldn't. And for investors, this could pay off in the form of higher sales numbers, eventually stabilizing the brand's position as a leader in both the electric and luxury spaces. But there's a darker side to this strategy, one that could result in catastrophic brand devaluation. Mercedes is known for its exclusivity, its status symbol appeal, and its reputation for high-quality luxury. Slashing prices, this drastically risks eroding that perception, turning the brand from an aspirational symbol into just another player in the crowded luxury car market. The long-term effects could be disastrous. Customers may start to question the true value of the brand, while loyalists could feel betrayed by the dramatic pricing shifts. On top of that, the massive cuts in margins threaten the financial health of both Mercedes and its network of dealers, some of whom are already crying out in panic. In a market where prestige and perceived value are everything, this could backfire terribly, leading to a drop in resale values, increased pressure on dealership operations, and a loss of consumer confidence. Is this genius, or is Mercedes slowly driving itself to corporate suicide? The stakes have never been higher, and only time will reveal whether this bold move will solidify their dominance or destroy their legacy. Mercedes-Benz Group AG's financial performance in 2023 showcased a blend of resilience and strategic recalibration amid global economic uncertainties. The company reported revenues of €153.2 billion, marking a 2% increase from the previous year, while its earnings before interest and taxes, EBIT, stood at 19.7 billion euros, slightly down from 20.5 billion euros in 2022. This performance was achieved despite challenges such as supply chain disruptions and geopolitical tensions. The Mercedes-Benz Cars division achieved an adjusted return on sales, ROS, of 12.6%, and the Vans division reported a robust 15.1% ROS. Notably, the company experienced a significant 61% increase in battery electric vehicle (BEV) sales, totaling 240,700 units. However, a nearly 25% drop in electric vehicle sales in certain markets prompted Mercedes-Benz to adjust its strategy, planning to introduce more combustion engine models than electric ones by 2027 to revive profit margins. To bolster its financial position, the company announced a share buyback program worth up to 3 billion euros and proposed a dividend of 5.30 euros per share. These measures reflect Mercedes-Benz commitment to delivering value to shareholders while navigating the evolving automotive landscape.